Many of you have asked me for an update on strategy, ticker symbol MSTR. The stock is down 60% over the last year. Bitcoin isn't doing much better either. It's down 31% over the last year. There's really bad sentiment on Bitcoin. It's personally making me really, really bullish. I mean, last year, Bitcoin was a consensus trade. Everyone was believing it's going to go to 250,000. Now it's at 71,000, and people believe it's going to 40 or $30,000 per coin. You even have someone like Mark Cuban selling his Bitcoin, most of his Bitcoin, because he believes it no longer acts as an inflation hedge. And that really surprised me because Bitcoin was never meant to be an inflation hedge. Like if you look at Bitcoin and gold in 2022, we had inflation and both of them went down. Why? Because the Fed was fighting inflation, the Fed was doing the right things, they were hiking interest rates. The best times for gold and Bitcoin is whenever we have inflation and the Fed is not really fighting it. This is when those kind of assets do really, really well. So for me, it was never really an inflation hedge, and I was very, very surprised by this decision. But he's not alone. You even have Michael Saylor, which he said, you never sell your Bitcoin. Well, he's selling his Bitcoin. He sold 32 Bitcoins worth $2.5 million. There's a lot of memes on the internet, saying you said you should never sell your Bitcoin, and Saylor is saying, no, I said your Bitcoin, but my Bitcoin I could sell it or do whatever. So people are really mad that he's selling Bitcoin, and he said you should never sell your Bitcoin. But if you look at the history of his trades, I wouldn't really be so upset because the last time he sold Bitcoin at 15,000, it went to about 120,000. So maybe that's another repeat where he's potentially selling the bottom and the coin could do much, much better from here. But I'm going to talk about MSTR today and talk about the company in general. Now, people always ask me, why do you talk about MSTR? You could just buy Bitcoin itself. Well, if you look over the last 5 years, MSTR has returned 2x what Bitcoin has returned. And this is because MSTR was able to create what they would call BPS or Bitcoin per share. Normally, companies like Bitmine, they do it by issuing stock at a NAV premium. And then once the stock goes below NAV, it's no longer trading at a premium, they buy back the stock, and that creates, Ethereum per share. With MicroStrategy, they do it through convertibles and debt and financial engineering and so many different things. But they have been able to compound a Bitcoin per share at a very, very high rate. Now they own about 4% of all of the Bitcoin that will ever exist. That's pretty amazing. And they have the supply locked in. Now, I'm personally not really a big fan of the company's strategy. Like before those preferreds, they were mainly doing convertibles. So a convertible bond, they issue it maybe for next 4 or 5 years. It's like at a 0.4% interest rate, very low interest rate. And over time, it will ultimately convert into shares at specific strike prices. So that's dilutive to shareholders. It causes dilution. Dilution is normally not good. But the interest rate was only 0.4%. Now, over the last few years, MicroStrategy started doing those preferreds. Whenever they do the preferreds, they're issuing a separate, you could say, stock into the market. The total right now of the preferred is $12 billion. Now, once they issue $12 billion worth of preferreds in the market, they don't really have to pay it back. This is not a loan. This is capital in the market, but they're paying a dividend yield to investors. So you can go out right now, buy STRC, and lock in about an 11.5% dividend yield that MicroStrategy is paying it to you. So MicroStrategy doesn't really have to pay back the $12 billion, but they must maintain the dividend yield, or what you would call the interest payment. So this is why they did it. They locked in permanent capital. And again, people are really celebrating this. They're happy. And Michael Saylor is bragging about buying back $1.5 billion of convertibles at an 8% discount and all these kind of things. And that sounds smart, that he's buying back debt at a discount and lowering the debt of the company. But if you ask me, would you rather have MicroStrategy, or if I was in charge of MicroStrategy, would I rather pay 0.4% interest and potentially be diluted 4 to 5 years from now? Or would I hang myself on 11% interest when I'm generating little to no revenues? If it was me, I would choose the convertibles, to be honest. So I'm really shocked of what Michael Saylor is doing. It's becoming unsustainable. The interest payment right now is $229 million a quarter, guys. $229 million a quarter for a company that doesn't really generate much in revenues. They have what they would call the US dollar reserves, which could cover the dividends for up to 1.5 years. And they brag again that if they have to sell Bitcoin, they will sell Bitcoin for them to pay the dividend. And Bitcoin could decline 91%, and they can still cover the debt and cover the dividends and cover everything else. So I think one reason why Michael Saylor has likely sold Bitcoin, and it was not a big sell at all, I don't think he needed the money. But I think the reason why he sold Bitcoin is he wants to reinstate confidence in STRC and the preferreds that if he has to sell Bitcoin to pay the dividend, he's going to sell Bitcoin to pay the dividend, and he's not afraid of doing it. Now, that sounds good and everything, but he's still paying 11% a year interest versus the 0.4% that he was paying with the convertibles. So for me, this makes absolutely no sense. I have no idea what he's doing. I know he's a smart person, so I hope he's doing the right thing. But to me, this is looking extremely, extremely dangerous. Again, guys, the company doesn't generate that much in revenues, 124 million a quarter in the software business, and they have expenses and so many different things. So ultimately speaking, it's going to become unsustainable, where he either has to issue more stock to pay the dividend, which makes no sense, or he's gonna have to try to issue more of STRC and use the proceeds to pay it back. And ultimately speaking, it's not gonna be sustainable. So this is why I avoided MicroStrategy. I told you guys Bitmine is a little bit better because Tom Lee is doing it in a much simpler way, where if it's trading at a premium, like where MSTR is trading right now at a 1.2 time NAV, he should be issuing the stock at a premium, okay? And if it goes below the 1 NAV, it goes to 0.9, then use the proceeds or the cash position, or then sell Bitcoin and buy the stock. Then you create Bitcoin per share. But locking yourself at 11, 12% dividends for a company that's generating little to no revenues, that's really dangerous, and it makes no sense to me. So I'm not really sure why Michael Saylor is doing this. I think what he was doing before was convertibles was much better. And I think this is really, really dangerous. Now, I still believe MicroStrategy could be a buy if you have really high risk tolerance and you're looking at a leveraged bet on Bitcoin. But I think between those two, Bitcoin and MSTR and Bitmine, I prefer the Bitmine strategy of diluting and buying back based on a premium much better than you could say just taking on all this debt and all these obligations for a company that doesn't generate much in free cash flow. So that's my opinion on strategy. Hope you enjoyed it. It was not financial advice. If you did enjoy it, please press the like button and maybe consider subscribing. So I'll talk to you in another video.